help us understand whether or not you think at least the streaming wars are going to change on Monday.
Look,
Oh, Nancy,
sorry.
go ahead.
I think I think the announcement is exciting. We've long been advocates of the stock for the services revenue, recognizing that iPhone sales had begun to slow a while ago. I don't think it's a game changer at this point in terms of total potential revenue near term. It's not. It's more of a psychological benefit to shareholders and an indication that the company's innovating rather than and I wouldn't even say innovating. They're following and hopefully branding this in a way like they always do. So we're excited to hear the announcement and the breadth of it, but I wouldn't be chasing the stock at these levels because of this announcement.
Tim, is content going to be kind of analogous to what the cloud had been for the enterprise? And it seems like, especially for Microsoft, it was really a valuation multiplier. I wonder because, as Nancy said, even if this does really well for Apple, it's not going to move the needle compared to an extra couple million iPhones or the margin that delivers. How should investors think about the value that this product announcement is going to bring?
Well, look, the content will be key, and we'll be eager to see what Apple delivers and announces on Monday. We know they have 12 originals in the works. We know they're spending over $1 billion a year on content. What we don't know is how that content will be bundled, and we don't know how that content will be priced. So if they have something like a Game of Thrones at an attractive price, that could be very interesting. The problem for Apple...
But even if it's great, even if they do have the next Game of Thrones, I mean, come on, it's not the next iPhone. So in terms of how it affects the stock and how it affects investors, even in the best case scenario, what is this really?
Yeah, I mean, and so sort of echoing some of Nancy's comments, if you do some simple math, right, if Apple can grow to 140 million subscribers, right, the size of Netflix today, by 2023, this video service will only account for 3% of revenue. The only thing that matters right now for Apple investors is the iPhone, which is in decline. We're on the sidelines with this story right now with Apple, the multiple at close to 5-year highs. With iPhone declining double digits in terms of units, we see millions of unsold iPhones in the channel. We see heavy discounting on the XR. It all speaks to gross margin compression. And when you look to the 2019 iPhone launches, which I think is the more important than what's going to be announced on Monday, this triple camera setup does not seem to solve the problem of these lengthening upgrade cycles. I think people are going to wait to buy the next iPhone until they can get 5G.
So if services can't outweigh the lagging sales in iPhone units, Nancy, what could be the catalyst for this stock?
Hi, contestant. Yeah, I think, listen, services is critical. Streaming is, even as part of services, is not critical. For us, the solution is most likely a resurgence of growth in China, which will prod global growth. I know I've been on that for a while. We're starting to see signs of it. And Tiffany reported this morning with great mainland China sales, but not necessarily the tourist sales. I'm less concerned about that because I'm looking for green shoots in China. So I think that will be a benefit to prop up iPhone sales as services continue to grow. I mean, don't get me wrong. I think services are critical. So Tim and I might disagree on that, but I don't think that streaming is enough as a component of services to force you to chase the stock here. We're closer to being sellers than we are to being buyers. We bought in December. We bought early Jan, and then we're in a mode now where we're going to begin trimming the stock back.
Yeah, interesting. That's been a good trade. But, Tim, I mean, what happened to the argument that, I mean, Morgan Stanley and some others, that all incremental growth from here on out for 5 years is going to be services and wearables, that iPhone units are simply not going to be the focus?
Yeah, look, we've also been bulled up on the services opportunity. I think that Apple has everything that it takes to build a very valuable services business over time. The problem is that iPhone, at $139 billion of revenue in 2019, the iPhone business is just so big for Apple that right now services is just too small to move the needle. It'll help. I think that you get a higher multiple on that, but with iPhone coming down double digits, I think it's in Apple trading at close to 5-year highs in terms of the multiple. The stock feels a little tough right now. to me.
Nancy, here's the argument that I see for the streaming launch and for Apple's services strategy in general. Tell me what you think. This is really about the platform. And if Apple succeeds in this services push, it gets people continuing in the ecosystem, not churning out. If they're downloading high-quality video, they're more likely to want the latest devices, including the latest iPhone, and maybe that acts as a catalyst to help to speed up the replacement cycle again. Should investors think of services not as an alternative to the rest of the Apple ecosystem, but as an accelerant to it, potentially?
Yeah, I think you're absolutely right, John, and that's what drives the stock long term. And I think it will. To Tim's point, in the near term, you have to replace a lot of revenue, and that's where the argument comes in. And so at a 17 times multiple, I don't think it's a bad idea to take some money off the table here and let the stock reconsolidate again, and then we see the next leg up in the next 12 to 18 months. But I think your point is the right one, and that's what we're banking on as investors.